Have any community members that are watching, I am going to call our Finance Committee meeting to order Wednesday, September 15th, 2021, 6:33 p.m. The Finance Committee acknowledges or supports the land acknowledgement and anti-racism statement that's on the S. Sutton Valley website. And I'm going to do a roll call right now. So it looks like Committee Member Callie is here. President Tish Sletter is here. Committee Member Kara Eads is here. Committee Member Gail is here. And Committee Member Jean is here. Alex has an excused absence tonight. And our Finance Manager, Joel, is here. And so I would like to move at this time that we adopt the agenda.
So moved.
Thank you, Gail.
Second.
Thank you, Callie. And I would at this point like to ask if everyone had a chance to look at the committee meeting minutes from the August 18th meeting. And at this point, I would like to move for approval of our August 18th Finance Committee meeting minutes.
I'll move to approve.
Thank you. Do I have a second?
Second.
Okay. There is no new business for this meeting and or continuing business or new business. So at this time, I am going to turn the floor over to Joel Heverling, our accounting manager, for a report on our July financial statements.
Okay, thank you. I'll do a screen share here. I guess everyone can see the what says July 31, 2021 balance sheet. Okay, good.
Yes.
So I'll start out with the balance sheet. The big news about the balance sheet, other than all the balances are fine, everything looks great. So I'll mention this PPP loan liability that, of course, we've talked about before.
Yeah.
This 357,700. So we just received news from the bank, actually, not just this week, actually, that that the Small Business Administration has forgiven our loan. So this is now, these funds are now forgiven to us. So you'll see, of course, this will happen in the month of September. We haven't yet received the official letter, but when we get it, the month that I get that letter, then this will essentially drop off the balance sheet. Then it becomes income on the income statement as debt forgiveness, so to speak, on the income statement. But that is the big news about the balance sheet. So this is certainly, this is great news that we're now done with this process. But other than that, in terms of like cash balances, you know, if you're wondering where is that 357,700, well, the offset to this is it's sitting up here in operating cash is where it is, the actual cash itself. And this is just the liability portion of it. But cash balances all look great. Net assets or net operating assets are nice and positive. So everything looks good in terms of from the balance sheet perspective. Now, if we go to the next page, which is if you're looking at that addendum on the website, so this will be page 2, the income statement, getting into the real meat of like the financial statements. But the income statement starting off I'll talk about the income first. So the year-to-date income, now that we're all the way into July, or these are through July, so our year-to-date net income right here, we're at 341,237, or excuse me, sorry, 365,541 is our net income as of the end, year-to-date as of the end of July. So last year at this time, we were, meaning July 2020, we were at 127,680. Of course, we did forgive April dues, which has an impact on that. But the good thing is we're running at this point a nice positive net income number. So we're ahead of budget net income wise by 168,513. Last year at this time, we were actually behind budget net income wise by close to $100,000. In terms of the collection rate, so the collection rate right here at the end of July is 94.5%. Now, keep in mind our budgeted collection rate at the end of, for the year is 95%. So in terms of perspective, at the end of July 2020, we were at 94.6%. So it's just a hair better than where we were or where we are right now at 94.5%. Now, at the end of 2020, we actually finished out the year at 95.5%. So the good news is I've already calculated the August collection rate, so our most recent collection rate for the most recent month that just closed. And we have now actually gone up. So now it's actually 95.2% year-to-date collection wise, meaning now we're actually tracking slightly over the budgeted collection rate, which is good. At the end of August 2020, we were at 94.5% collection wise for the year. So we are now already tracking better than how we did a year ago at this time. So that's great news. So, so the big thing is at the end of August 2020, we're at 94.5% collection. Now, at this point of the year, this is where we tend to make up ground in terms of collection wise. So at the end of August 2020, 94.5%. Then, like I said, we ended out the year at December 2020 at 95.5%. So now at the end of August 2021, we're at 95.2%. So we're tracking better than how we tracked last year. And we have now inched up a little over budget in terms of the collection rate. So that's really good. So I guess you could say in combination of that and running a nice positive income over budget, we're doing well budget wise. In terms of the expense to revenue ratio that I would say, which is just nothing more than, it just takes a look at your total expenses and divides it by your total revenue. So in this case, a lower number is always better. So we're at, like, for example, in June of 2021, last month, we're at 88%. Since our net income and our budgeted to budget net income at this point is getting better, we would expect to see this number go down, which it did. So now it has dropped to 85.8%. At the end of July 2020, it was actually 93.8%. So a higher number is worse in terms of this percentage wise. So we were doing better. So it just completes the story that we're doing better now than we were last year at this time.
Joel, can I ask a question?
Sure. Yeah.
So when you look at that, the collection rate at 94.6%, is the correlation for that is when you look at, and you haven't gotten there yet, but we will, when you look at the lots or the properties that are not current on their dues, is that where that 5% comes off of, that collection rate?
Yeah, and that's basically, if you could think about it just on simple terms, if we had 100 lots, so to speak, billable lots, then that means 95 of them have paid their dues year to date and 5 haven't. So you could think about it like that.
Right. Okay.
And this collection rate is only concerned about this year. So meaning if someone owed dues back in 2020 and they're paying it in 2021, that does not help out this collection rate. Anything that was from 2020 goes to the UDR account, reserve account. So this collection rate that I cite truly is only talking about the dues that were billed in 2021 versus the dues that we've received.
Gotcha. Okay, thank you.
Yeah. And the next page, page 3, which this is just this capital reserve sheet, which is actually a pretty handy sheet. This is just showing you, as I talk about every month, just what the net usable cash will be at the end of the year at this point, 12/31/2021. And this is after the board recommended carryover. So if you looked at the number up above that, that's what it would be before the kind of like the 600,000 set aside that they would like to at least kind of retain. But this is just a function of starting cash. The dues, this is a little different in terms of, now this is the dues that we truly did receive, 2021 for collections, and then just piddly things like investment income. And and capital expenditures or any other type of expenditures related to capital will show up in here. And then our budgeted collections. And then this is the most important number right here, obligated expenses, which just comes from, well, let me just pull it up here real quick.
And Joel, I like to put this in layman terms for people that are watching that aren't finance people. Those reserve accounts are just basically savings accounts, right? So a capital reserve account is a savings account for capital repairs for the association. Is that correct?
Yeah, you could think about it.
Yeah, it's a savings
So,
account for people that are, watching that aren't finance people. I like to put it in terms that people can understand in their households.
Yeah, like the operation portion of your dues goes to fund the operations, which is this column right here. And then the capital reserves shows up at basically this last column. But yes, you can think about it just like that. The SURF Capital Repair Replacement Reserve Fund, which is just all the stuff besides roads and mailboxes. So like buildings, playgrounds, things like that. And then obviously roads and mailboxes. Yes, so these are the set aside accounts of so the SURF portion of your dues, roads, mailboxes, all get swept into these holding accounts. Then when the board approves expenditures, like Sam's last expenditure or rec related expenditure, then it becomes an obligated expense until we pay for it. And the reserve studies, of course, go by the, our beginning reserve amount for the year and so on and so forth, and build off of kind of those numbers. Now these.
I think Gail has a question.
Oh, sure. Yeah.
Yeah, since we're kind of relaxed tonight, I just want to quickly ask for an update, Joel. I should remember, but tell us again, the board density reduction fund. I remember we gave back to the county, I think, a bunch of lots. And so maybe you could just fill us in on that history. And also, are there restrictions on how that money is spent?
Yeah, well, I mean, the board density reduction fund is basically to fund, it's basically for green space. So like buying lots, selling them, or purchasing lots to turn into green space. Now, if we sell a lot, then that money will be dumped back into this board density reduction fund as well. So like, for example, right now we have a few properties, basically foreclosure type properties. And when we actually sell those funds, and those funds will go right back into board density reduction fund.
And what can it be used for, that money?
Basically, it's just used for green space type lots is what that's allocated for.
You mean to purchase additional green space lots if they somehow come available?
Yeah, to buy lots, and then basically we're going to take those lots and turn them and just green space them out, like just so not like a profit motive, but basically we're going to take lots and then retire them and turn them into green space, so to speak.
And the balance in it is 87,700.
Yes, that's
so
right.
That might buy a lot and a half these days.
Yeah.
An undeveloped lot.
In Sun Valley, a whole lot greener.
Yeah. So like I said, we have a few lots right now that we've acquired like through a foreclosure sheriff's sale that actually happened in 2020. When we go to sell those lots, we'll reimburse this fund with the proceeds from that sale.
Good.
Basically kind of like what happens like with a foreclosure sheriff sale, then you'll have a lot and then we'll wipe out the dues, but portions of those dues relate to SURF roads, like UDR in that case. So then when that comes in, then basically we use the board density reduction, we reimburse for those dues. And then when we sell, then those monies come back into the board density reduction.
Thanks.
Of course, that's getting more technical, but
That's okay. I was a little fuzzy. I should have. It's been a while since a few years since I had looked.
Oh,
at
yeah.
things.
And of course, this is probably the fun where the least amount of questions get asked on. So that mailbox is probably. But So basically all these major balances, like the major funds, like surf roads, mailboxes, well, they're all up from last year. Capital reserve, holding funds, and I mentioned this before, but like when you sell a home and someone buys your house, that 1/4 of 1%, this is the bucket that it falls into right here, which is why you see it going up over time. Now, the next page, page 4. So basically, we're looking at the income statement again, but now we're looking at this from a departmental perspective. So like the month to date, 111,435. If I flip back to the income statement, there it is right there. And then the income statement has it by like categories like you would normally see on an income statement. Basically geo bucket categories. And then this is breaking it down by what department was responsible for what, basically. The net incomes will all add up to that 111,435 here. Now, in terms of like the biggest, our biggest revenue producing department is golf right here. So at the end of July 2021, they had 148,958. Last year, at the end of July 2020, they had 121,233, which means they're approximately $28,000 higher than they were last year at this time only for the month for July. And then you have the actual salary. Basically, you have the salary benefits number right here, and then the other expenses number here. So these two add up to be 96,602 for golf for the month. Last year, they were 82,177, so their expenses were a little lower by about 14,500. But the important number for this is the net income for the actual department, which is 52,356 for the month. So last year for July 2020, they were 39,056, so they're $13,300 higher for the month.
But also we need to note that they were closed for a few months last year, so they couldn't.
They were closed for around, we'll say approximately, I want to say around 40 days or something like that.
Lost revenue last year.
Yeah, you'll have lost revenue, but you'll also have reduced salary expenses during that time as well, since the staff was laid off during that time period. If we turn to the next page, page 5, now you're seeing this, which becomes a lot more relevant, especially once you're looking at all the way through July. So now you're looking at all the departments on a year-to-date basis right here. So now if we look at golf year-to-date, 765,378 in revenue. Last year they had, I would say approximately $577,000 in revenue, which means they were about real close, about $189,000 higher this year than they were last year at this time year-to-date. In terms of expenses, when you add up all these expenses again, the actual salary benefits expense plus the other expenses here, then comes up to 537,301. Then last year they were 467,176. So kind of like what Kim was saying, alluding to, since they were closed during that time, so we would also expect their expenses to be lower because of that too, and that kind of plays into this as well. But so expenditure wise here is about $70,000 higher this year than last year to date, but their net income of $228,077 versus last year's net income of $109,514. So they're $118,563 higher net income wise than they were last year at this time. Then I would say that is pretty much, that covers like the major highlights of the income statement. If anyone had any questions on these numbers.
I didn't have any questions. I just had a comment that, I think that the association is in a good position when I look at all the bottom lines of all of your report sheets, the balance sheet,
Yeah,
and the operations and the net sums on all of the different accounts. It just looks like we're in a good financial position.
yeah, we are.
Does anyone else have any questions or comments or need anything clarified on any of the reports?
No questions from me.
Okay. And it doesn't look like we have anyone in our attendees from the community.
That's a first, I think.
I know. I'm like, does everyone trust our watchful eyes and great stewardship of our community finances? That is a first. There's usually like one or two folks that are, hanging out, kind of watching. But I also think with things being posted online, it's very easy for people to just go and look when the time is convenient for them versus being here at 6:30 tonight with us. So without any community questions, is there anything else for the good of the order from anyone, or else we will have the second fastest meeting we've had, because last month was pretty fast, but we did have at least a capital request that Sam put forth for us to listen to, which the board passed, by the way, for the pool equipment, so that we can make sure we take care of our pools. And in the absence of any questions or comments, I think I will call this meeting to a close at 6:55 p.m. So I move to call the meeting to adjourn.
I'll second that. Thank you.
All right.